likely to go higher or lower, or just the general trend, right? If we have those EMAs, I promise you we're above the EMAs. But of course, you can use that yourself if that's something you want to do, right? So we can see that the general direction of the trend is up. So I'm going to be most interested in bullish fair value gaps and swing highs to be taken, right? So let's go ahead. We'll put our ERL. We're on the weekly, and then we get our IRL. All right, so what we're looking for, per usual, is before we can even start thinking of getting into a trade, we need a key level to be hit, right? Um, if we don't have that, you're gambling, like just plain and simple. If you don't have a key level coming from a higher time frame, you're gambling. So we're waiting for that. We can see that we have a big bearish reversal candle after taking out ERL, right? So we'll map this out. We'll say ERL taken. And when ERL gets taken, we know that we can usually rely on price to move back into IRL, right? So there could even be a short here inside candle 3 for us into that key level. Remember that, you know, it's not wrong to necessarily take counter trend trades. Of course, you can do that. But, you know, make sure that you at least, if you're gonna be doing counter trend trades, at least be good at taking trending trades, right? Because those should be easier, right? So, like I said, it's not wrong. You can still do it, right? You can take this candle 3. It's a huge reversal candle. We're clearly moving into to IRL, right? So, and we have a change in state of delivery here for that weekly order block, right? So there's definitely a trade in here. Um, if you guys want a little challenge, go into your charts and you can take that as homework, right? Go on the weekly. It's January 2024, the 8th. Go look at that subsection of price and see if you can find the shorts inside of this weekly swing formation, right? So like I said, we're waiting patiently for one of our key levels to be hit. Now, as soon as it's engaged, I'm not gonna hop into a trade, obviously, right? I'm going to become interested, right? The first thing that we need, our first prerequisite, is for a um, key level to be hit so that now we can start to look for all the other stuff that we typically look for. Can anybody tell me what you would usually be looking for after price hits this level? What are some things that I would like to see take place in this key level that would make me more confident to drop down to a lower time frame and start taking trades going higher? Close, very close. Inversion will be for when we drop down in time frame, but I'm asking same thing with OB and CISD. Um, I'm looking for something to happen still here on the weekly time frame before I drop down onto the 4 hour, right? Yep, confirmation through candle closes for sure, right? Yeah. Uh sweeps too, for sure. And how about candle formation, right? Well, what we went through just like is a very super quick glance. If we have a candle with a big body and small wicks, that's a continuation candle. If we have a candle with strong wicks, right? Then we have a reversal candle. If we have a indecisional candle, it's a weak wicks and weak body, right? So if I can get a reversal candle and the confirmation closing, that's going to bode very well for us. Yep, there you go. Power of three as well. The power of three would kind of look like this, right? There's our accumulation, here's our manipulation, and we would anticipate distribution, right? So yeah, for sure. But mainly, um, guys, don't underestimate the candle formation stuff because it really does help, even though it's quite simple. So what we'll do here is we'll drop down to the 4 hour, okay? And then we're going to use that indicator that we were talking about last time. We're going to use it to show us that higher time frame, right? So I'm mainly paying attention to the weekly here, but we'll have the daily just as a little bit of extra, visual aid, we'll call it, right? So we already know, and remember, guys, if you don't understand something, ask. Otherwise, it's your own fault if you didn't learn anything. You just like wasted an hour, right? Um, we already know that we're going to be using swing highs and swing lows, right, to detect market structure breaks, right? So, for example, we take out this high, and then we get a market structure break here when this candle closes below this low, right? We already know that. Most of us are already familiar and kind of already remember that, right? Um, Once we start getting this entry going, we'll start talking about the advanced version of it. But just to reiterate some of the things that we've already been talking about, we can see that we have all of this low resistance liquidity, right? And we want to see this forming before we take any trades at all, right? We want to see that liquidity on the opposite side um, of the curve, right? Because we are on the sell side of the curve, right? Everybody should be able to see that by now, right? We're on the sell side of the curve, and our job is to figure out when are we likely to end this sell program. Because when we're on the sell side of the curve, we are in what's called a sell program, right? So we'll put sell side of the curve. And then we're looking for that buy side of the curve, right? So we hit our key level. We would like to see candle closes back inside of this previous candle's range, right? So let's let price form up a little bit. Now that we've hit the key level, we're also paying attention to these last fair value gaps, right? Even though this one is really small, I'm paying attention to it for a potential inverse, right? We get another move lower, okay? Now, once again, I'm going to map out any fair value gaps after we hit the key level because I'm wondering and I'm anticipating that one of these is likely to become an inversion fair value gap. Where is it? There it is. Okay. I'm anticipating this. The inverse does not happen until we actually close above it. Um, but that's what we are anticipating, right? We could also be anticipating, hey, these consecutive two bearish candles into the bullish key level, if they get closed above here, what do we get? Exactly, CISD. When you guys are watching price, it will be very helpful if you can start looking at price like this, right? Even though these are not confirmed, I'm waiting and I'm anticipating, right? Imagine seeing this as an order block before it even becomes an order block, right? And for those of you that know the breaker, this could be a potential breaker right here. We'll probably go over that the next time we talk, but we'll keep things a little bit, we won't go into too many different things today. So I'm anticipating that, right? Think about all of the framework that's going into this right now, right? We have those high time frame key levels. We have our low resistance liquidity signatures on the higher time frame. Our bias is bullish, and we're looking for us to start curving, right? Start creating or start disrespecting bearish fair value gaps, disrespecting bearish order blocks and trying to eventually start to curve up, right? This is our job. If you can start to anticipate when we're curling up, you have a lot of time. Even after here, you can still get some trades, right? All the way on until this entire thing is played out, you're going to have a myriad of opportunities to catch trades, right? And the quicker, well, typically the earlier that you can do this, the better for you because your risk management will likely be tighter. Um, and yeah, you will be able to ride a longer sustained move if you so please. Right, so let's make sure that we get this last low resistance liquidity um, locked in. Right, okay, and let's let price do its thing. All right, so we get an inverse here, right? So we can take a position. And if let's say that you've been testing this strategy for a while and the win rate is not something that works very well with your personality and your mental, then you can wait for something like I'm going to wait for the inversion and the change in state of delivery, right? So you can wait for more confirmation. Okay, so we get that inverse there. We'll go ahead and we'll pop a trade off on that. Okay, we'll put our stop loss down here, put our TP. Now let's just let's assume, right, that we have multiple contracts on, right? Let's imagine that we have multiple contracts on. First contract's coming off either at 1-to-1 risk to reward ratio, 2 to risk to reward ratio, or the first price signature or PD array inside of premium, right? Low resistance liquidity is when we have swing highs like this. If you don't know what a swing high is or our definition, we look to the left of this candle, we look to the right of this candle. If this candle's high is higher than the two candles besides it, then it is a swing high. Same thing for a swing low. If I look left and I look right, this candle is lower than the two candles besides it. Therefore, it's a swing low. So low resistance liquidity is when we have a buildup of swing highs, right, that fail to take each other out, right? What would be an example of a swing high taking another swing high out would be like this swing high being taken out by this one. But notice that as we move lower, we don't take this swing high doesn't get taken out, this one doesn't get taken out, this one, right, and so on. So there's a lot of money above these swing highs and swing lows. So low resistance liquidity, when we start moving in that direction, you're going to see that price violently typically will go through these, especially the ones that are still in discount. Um, but yeah, so we'll just leave it like this, right? We'll put the ideal scenario, but just know that you should be TPing at 1 risk to reward, 2 risk to reward, first time in premium, right? Those are like logical places that one would start to do that. Okay, let's take this off real quick. Yeah, there you go. Keep it a little bit clean. All right, now high resistance liquidity. High resistance liquidity in this case is when we take out a swing low in a key level and then we get a market structure break, right? So let's see if we can get a market structure break. Nothing yet. Okay, almost. Cool. So we get a market structure break here, right? We get a close above this swing high, just barely, right? So now we have a market structure break. This is now considered right here, this low. We'll put a nice big bright color on it. We'll do pink. Okay, this low being taken out, right? Notice how we reject the low right? After we um, move into it, we reject it. And how do we know that it's rejected, right? The way that we know is because we have a market structure break and we're having bearish price signatures be disrespected. This bearish fair value gap got closed above. This bearish order block got closed above. These down close candles created a bullish price signature, right? So that's high resistance liquidity. Notice, right? None of these take each other out. Low resistance liquidity. But with high resistance liquidity, it gets taken out and it gets rejected hard, right? So we'll put high resistance liquidity, right? We'll put low resistance liquidity. Okay. Now, for the advanced market structure, we already know, right, that when we close above this high, we have a market structure break. Okay. Now, the next thing that we're going to be looking at is advanced market structure. Okay. So I'm going to clean this up a little bit for now. Okay. Just remember what we did here. But let's take a swing low, for example, right? The way that we find a swing low, as we just discussed, is we look left, we look right. If those two candles are not lower than this one, then we have a swing low, okay? So what I want you to do is after we start getting this high resistance liquidity run, after we start getting the inversion and the change in state of delivery, I want you guys to keep an eye out and look for a swing low. I want you to look left. I want you to look for another swing low. And I want you to look right. And I want you to look for another swing low. Okay? When we have a swing low and we look left and we look right and there are two swing lows besides it, we call this low down here an intermediate low or protected low. Okay? And this concept is very good for stop loss placement because if you put your stop losses below what we call short-term lows or STLs for short, do not be surprised. My bad, mic disconnected. But do not be surprised if price comes down, takes your stop loss, and then it goes. Okay? Because when we're in the buy side of the curve, right, we can create order blocks, right? Or there can be a swing low, right? And then price comes back down, sweeps it, and then we go, right? But this typically only happens with a short-term low. So if you place your stop losses below an intermediate low, you have a much higher chance of that low remaining intact as opposed to using something like this. If we put our stop loss on this low, it's not um, it's not as safe, right? Because price likes to run short-term lows, especially when we're on the buy side of the curve, right? We call it a continuation purge, right? Where we purge a low and then we continue higher, okay? So let's see how that pans out here, right? Maybe price comes down, takes this short-term low, and this is exactly what I'm talking about. This is what we would call a continuation purge, and where even though we're in the buy side of the curve, price doesn't want to use a fair value gap. It wants to take out a low, sweep it, and then go, right? So then price starts to move, right? And I want you to pay attention to what happened here, okay? Let's take a look. I look left, I look right. What is this? Who can tell me what this is? What kind of low is this? Intermediate term low or short term low? Right? Okay. And why? How do you know that it's an intermediate term low? What process do you have to take yourself through in order to be able to confirm that, right? I like Victor's answer, right? Intermediate term low because what am I doing? Think of it as the same way that we identify swing lows and swing highs. I look left, I look right. Those two swing lows are not lower than this one, right? So there is the intermediate term low, or ITL for short. So let's say um, that I wanted to take another trade. This is going to be a candidate for where I should probably put my stop loss because it's going to be considered much more protected, right? So let's continue watching to see if we get other opportunities or if we can find other intermediate term lows, right? Another qualification for intermediate term lows, right? But this one, I would kind of just keep this one in the back of your mind. I wouldn't put too much emphasis on it, but if we fill a high time frame fair value gap, the low that gets set in that fair value gap typically is also an intermediate term low. Okay, so this could also be considered one. I personally, I like using the first definition more, but you can use both of them. It's technically not wrong. Okay, so we get a creation of an order block, right? So this one, obviously, if I look left and I look right, it doesn't have swing lows besides it. It's just about the fact that it filled a fair value gap, right? Okay, so let's see, maybe, we already kind of know that this one's probably not going to be an intermediate term low because we look left. We don't have anything there, right? Okay, so now we get, no, actually, we still don't have one yet. Okay, let's see. Now we have one, right? I look left, there's a short-term low. I look right, there's a short-term low. I can now categorize this as an intermediate term low. We have an inverse. I can take a trade, put my stop loss there, and maybe see how it goes. We are at the equilibrium, so you kind of have to be a little bit careful. Price can sometimes chop around there. Okay. And remember, guys, when we're looking for intermediate term lows, we also need things like the inversion or a market structure break or a change in state of delivery, because if you just have that um, without any of those things, it's not going to be as high probability, right? And all these little candles right here, you could technically categorize them as some of them as order blocks, but these are going to be low probability. So for me, when I see something like this, like a crap ton of indecisional candles, that's consolidation. I don't really want to take anything from that. But notice, right, this intermediate term low is being respected thus far. Right, so you can just see price is just consolidating right now. I don't want to, the main one that I would have been using, right, was this inversion right here. And that's where I could have added another contract here, put my stop loss there, and then aim for target and premium, right? And we can see after price is done consolidating on that inversion, we start to move up again, right? Um, and we'll let price play all the way out. So are there any questions on the advanced market structure stuff? So if we are long from bottom, we can move the stop to intermediate term lows. Yes, that is another very useful thing about the advanced market structure is you can trail your stop to the different intermediate term lows. You can look for new entries off of short-term lows, and also when you're in a long and price kind of starts coming down and you're looking for where it may stop and then go back up, you can shift your focus to the short-term lows and or fair value gaps or order blocks, you know. Um, so it's mainly to give you extra information on so that your risk management can be improved as well as you can see the newer opportunities, right? Like this, for example. This is not an intermediate term low. This is a short term low, right? Because if I look left, there's no swing lows. If I look right, there's a swing low. Okay, so we take that out inside of the inversion. All right, and we can see we take it out. This is the continuation purge, aka, as some of you guys know it, turtle soup, right? Um, and you can see price goes higher. And you can also do this on a higher time frame chart to get really, really strong levels, right? So let's see, we'll drop down to, or drop to the daily. See if we can find another example. Okay, let's take this fair value gap. Would trade a reversal above the 0.5 fib. I know it would have been against the trend, but still. If you are expecting a reversal, yeah, you do want it to be in premium, right? Maybe I would have expected a reversal to take place here. Um, that's where I would have been looking for it. But as you can see, you're definitely not getting any confirmation of that on 1, 2, 3, 4, 5, 6, 7, 8, just 8 straight days of green. Uh, that should be enough to be like, yeah, probably shorts are not in play right now. Okay, so we have that daily IRL. Here's our daily ERL. Okay, then we're going to drop down to the 1 hour. We can see potential market maker buy model forming, right? There's that original consolidation. We want to see manipulation into the level and then a move out of it. Okay, so let's wait and see when we get that. Okay, we have a move into the key level, right? So now we're looking for all that stuff we were talking about. Let's see if we can get an inversion, right? Okay, so here we could have used this CISD as well, right? We get our inversion up here. Okay, so we'll go ahead and we'll toss a trade on. Okay, now when I'm in this trade, even though uh there isn't an intermediate term low formed yet, I can anticipate that this is likely going to be an intermediate term low because if I look left, I can see a swing low. If I look right, I don't see a swing low, but I would expect, right, or anticipate that a swing low forms inside of this inversion. Now, because the stop loss is so far, I'm actually going to opt to use the candle bodies as opposed to the full-on wick size, right? And if I TP up here, I get a little bit more than 1 to 1R, right? Probably like 1.25, maybe 1.5, right? We'll put on the position actually just to see. Okay, so look, if I put it at this low, I'm getting pretty much like 1 to 1. I put it here, I'm squeezing out a little bit more, I get like 1.4, right? So we're going to wait for that intermediate term low to form. Okay, and there it is. So I can be a lot more confident about my stop loss placement at this point, right? Oh, whoops. Okay. Well, uh, just totally lost my spot. one sec. Okay, and so yeah, so we can see prices creating order blocks, right? These order blocks are being respected, right? We're getting intermediate term, well, that's not an intermediate term low. Check out these short-term lows, right? Short-term low gets taken, and then we get that continuation purge, and then we start to move higher, right? We'll move all the way into that ERL. So this could be considered an intermediate term low, right? Because it filled this fair value gap. Well, we're on the 1 hour, so it's not going to be as reliable. If it was on the 4 hour or anything above that, a lot more reliable. We might be going for one of these shorter term lows to potentially go back up. Okay, we take out a short term low there. Okay, we take out a lot of lows there, right? And we get this continuation purge, right? And then we get a CISD as well. Also bodes very well for price. Okay, low gets taken. Right, so at this point, we're still looking for longs here, but at the same time, right? Price is retracing. So we want to see a big move back up if we're going to take another position. There's a change in state of delivery. Okay, and then price goes back up and then takes out that ERL, right? All right, cool. So any questions on the advanced market structure or high resistance liquidity? That's the main topics for us today. And if there are no questions, then we'll go straight into the homework and then what's it called? The homework, which I think who sent in homework? I saw John put something in trade ideas. Um, Anybody else? Yeah, did you put it? You put it in trade ideas, right? All right, cool. Okay. Yeah, we can take a look for sure. All right, so we'll do a quick little market update and then we'll move into the homework and yeah, that'll probably be where our time ends. All right, so last time we talked about BTC, we talked about it heading lower, right? Why? Because we have a bearish fair value gap here on the daily. We have an ERL that we're looking for price to trade into, right? We got this candle 2 closure, back inside candle 1, check out candle 3, 4, and 5. Guys, we pretty much went over this setup together before it formed, so that's a free trade, you know? It's free money right there. We get a change in state of delivery here on this candle. This candle comes back up, retests it, and then moves lower. All right, let's drop down, time frame. Okay, so we would have waited, right? We would have waited till price hits the key level. Then we're looking for either an inversion or a change in state of delivery, right? We have these consecutive up close candles. We get our change in state of delivery on this one, and price comes back up to retest that order block, and price drifts lower. And notice, right? Key level gets hit. I look left, I look right. That's going to be my intermediate term low. That's where I want my stop loss. Okay, so still lower for BTC. Um, like we said, we're trying to look at this as a market maker sell model, and price should continue to drift lower into here. And the opportunities you will be looking for price to move lower should come from the 4-hour candles, right? ETH, same thing, right? It's good to see that what we talked about is unfolding, right? We talked about how we're in the sell side of the curve now, and we can see price drifting lower, and we're expecting price to move all the way down here into ERL, right? Sol, same thing, right? We're on that sell side of the curve. We could see price drifting lower, and we're aiming for this low, right? Gold. So if you guys took the gold trade or the gold swing trade that I had called out, which again, this is what happens when you take trades coming off of the 4 hour. Um, take some time, right? But that was our swing trade right there. We also talked about these equal highs, very likely to be hit. They got hit today, so also nice to see. Um, yeah, not much else to say about gold. Okay, I guess we didn't go over silver, and I don't think we really touched these too much, right? Any any charts you guys want to look at? We can still see on dollar, we're still in that sell side of the curve, right? NQ, NQ had a really nice short today. Notice we took out previous day high, right? And we got that SMT, right? So check this out, just to kind of touch on SMT, right? This is yesterday, right? These gray vertical lines are separating the days. Nasdaq today took out previous daily high. YM did not, right? So when we took previous daily high, um, I was on the 1 minute, right? Let's actually map out previous daily high. Okay, we took out previous daily high. We'll map it using this. Okay, now I didn't take the trade anywhere in here, right? We'll actually remove the SMT so we can see it a little bit clearer. I waited, right? I waited till 9:30 opening before I did anything. Even though we hit the key level, guys, remember that time takes precedence over price. Takes precedence over price always, right? If I don't wait for the correct time and I'm only trading just price, I'm gonna have a lot of unneedless losses. Um, this is our first presentation fair value gap. That's something that we're also gonna talk about. A fair value gap that the first fair value gap that forms after key times like New York session, London, they can be used to frame really nice trades. So yeah, so I went short here, right? We got a change in state of delivery here. I took one more, and then I took my 2R, right? And I could see on the 1 minute as well, we have a very clean market maker sell model, right? And even though I didn't hold all the way down to these lows, it was still really, really nice and easy trade, right? Think about it. If you go short in here, Look at think mentally, like how is your mental drawdown going to be affected if you went short up here and price only has these super shallow runs against you, right? You're gonna feel pretty good about it. Do you think gold retraces back to any levels, or is it gonna stay around here, wait for break of structure? We got a break of structure here. We got a retracement into this order block. We got a candle closure. So I think it's going to start moving up into here. I think the retracement's done. If we do get a retracement, I would like to see expansion past and then a retrace inside of it. Platinum, what's the ticker for platinum again? I always forget. Is it like XBT or something? I can never remember platinums. So let me know. You let me know the ticker and we'll put it up. Oh, XPT. Okay, okay. Okay, I don't know what these notes were for, but let's take a look at the monthly. Okay, we have a monthly fair value gap right here. And then we have our ERL up here. Okay, we'll drop down to the daily. So for me, I'm waiting for that inversion. We already had a very nice sweep. We've had some good candle closures. Once we get this, I would be dropping down to the 4 hour, or even maybe, nah, you use a 4 hour. We can see that right now we're in candle 3 of the weekly candles. So I think that this week long should be good to go, but I'd rather wait for this inversion on the daily to really confirm. And then, or we can even maybe use a change in state of delivery, but this is not the highest probability order block. Um, but I do think that it starts moving up, right? I would kind of like view this as the original consolidation. There's the sell side of the curve. This is probably the low, right? Intermediate term low. I look left, look right, intermediate term low. I'm just waiting for that daily inversion. You don't have to wait for it, to be honest, but me personally, that's just the way I like to trade. So I would say bullish. I think that we're in the midst of a market make or buy model. So let's see what happens. Cool. Any other requests? Or can we move it on? Alright, cool. Looks like we can move on. Alright, so let's do the homework. Let's go into trade ideas. TA on BTC. Okay, cool. Gotta move into a key level. Change in state of delivery. This order block gets respected. Okay, he's mapping out his low resistance liquidity. He's got his low resistance liquidity on this side mapped out as well. Trend is bearish, weekly bearish, 4-hour bearish, M15 just turned bullish, and ERL is mitigated and price makes a movement to the inversion fair value gap. Okay, form. So if my thesis is correct, I will wait for price to go up and mitigate the order block and inversion fair value gap and trade the reversal with an IFEG CISD plus an OB. Nice. Okay. Yeah, so we have a move into a bearish fair value gap. We get a candle 1, candle 2, candle 3, right? Candle 3 gets a nice move lower, takes out candle two's low, and yeah. Yeah, it's a good looking chart. Um, I don't see anything that's wrong here. So yeah, looks good. Nice work. Okay, let me pull up DMs real quick. Yeah, good work, man. Okay, so Kick-Ass asks, question for tonight. The double purge you mentioned is already happening on 15-minute yesterday and today again. Can it be an early signal on what's coming on high time frame? As prices fractal and does on low time frame, what comes next on high time frame? Just a theoretical question. Um, yeah, yeah. So obviously, right, the first point in time that we can see anything uh, start to form on the high time frame is going to be inside the low time frames, right? And you're absolutely right. Um, you know that price is fractal. So everything that we see transposing on the higher time frame we can find in the lower time frame earlier, right? How long do you think we're in a bear market for? I would be relying on seasonal tendencies to answer that question for me. Um, So we can pop out that chart real quick. Get some market bulls. Just pull that up real quick. So they don't have a BTC chart on this website at least, but um, we can use this NASDAQ. So as we can see, right? February, we typically move higher. Right now, we are not moving higher, right? Um, when we have a kind of, what would you call it? A disagreement in the seasonal tendency chart, we can still extrapolate information. If usually February is supposed to give us a little bounce up and it's not, and that just means things are like very bearish, right? And as we've seen, that I mean that checks out, right? We've been moving pretty strong to the downside. We're already at a 50% retrace on Bitcoin, right? So we look to March. Now, because February is extra bearish, we can look for March to not be as bearish. So potentially we can actually get a market bottom early, early to mid March as opposed to waiting for late, late March to April. Um, but yeah, so if I had to put some money on it, I would say mid March to early April is likely um, where I would place my bet that price is going to do better. And like I saw, and this is not like working this into my thesis or anything, but I do like it. But Trump's tweeting 2026 is going to be a great year for the stock market. I remember the beginning of last year, everybody was like really doubting him because of the tariff war stuff, and then as soon as he said it's a great time to buy, right? One of his most iconic tweets, bro literally called the bottom. So, when we have a president who is very much concerned with the health of the stock market, um, it just kind of adds on to that confidence, so to speak, right? Yeah, yep. Well, yeah, usually February moves up a little bit and then it moves down into March. IMO, BTC retraces 70% ish, and we can look for accumulation. Yeah, I would be kind of the same opinion because that would be at that low, right? 70%. Oh, 70% is really low. I don't know about 70. I would say probably like 60. That low right there is kind of where I would expect, Um, that we start curling back up. Yeah. Yeah, so I think bottoms, I think it's soon, right? We drew our standard deviations last time, and right now we're in one of those levels, right? Um, Sometimes price might go a little bit outside of it, and that's okay. Can also draw this one, right? Maybe this one is probably better, or at least it agrees with what I'm thinking a little bit more, which I'm really looking at probably like this low being taken out, and then we go. But we'll see. We'll see it when it's happening, but we can see also that we kind of have what resembles to be a market maker buy model, right? We get um original consolidation, first move down, second move down. Now we're just waiting and kind of eyeing for that smart money reversal, right? Yeah. Also, Trump seems to be very pro Bitcoin, especially with China collecting so much of the tangible gold. I think Trump's gonna try and make beat like America's play to, you guys can have the gold, but we'll have Bitcoin. We'll have digital gold. There could be a third move down. We could get a move up into one of these fair value gaps right here and then shoot lower. Yeah, for sure. Let's see. Um, all right, cool. So right off the bat, your charts they need to be, maybe a little bit not so hectic. Like I understand like I'll tell you what I understand from looking at your chart. I can see that you're seeing this as candle one, right? 4 hour accumulation, right? 4 hour manipulation. Yep, 4 hour distribution. That I understand. I don't know what this other box is right here, right? Because your standard deviations, I'm guessing they're anchored from like this leg. Um, let's see. We'll look for an entry zone here. Okay, we hit a key level, we get an inversion, we get a market structure break. These two fair value gaps definitely good places to look for entries. You can see price consolidate on them. Closed above previous swing high. Retested the IRL zone of that discount area. It's a perfect IRL trade. Yep. Yeah, that's actually very solid, honestly. That one is solid. Check out this one. Mm, this one's this one's a little messy. I can't really see that this is candle like one, right? You would have to get it from the low. This doesn't really look like candle two since this one goes lower. Kind of looks like this would be candle one, this one would be candle two, and maybe candle three. Um, you have your order block mapped out. Nice. Okay, let's see. Yeah, I mean it's not a bad entry, but I would like to have seen like an inversion on this side. Oh, we did get a market structure break here actually. So yeah, that makes these IRLs good candidates. And I'm guessing you anchored your standard deviations from this leg lower, right? That candle too. That's pretty nice. See, like I don't think that this is candle one, this is candle two, and this is candle three, right? It looks a lot more like candle one, two, and then three. Um, I'm gonna assume that this is a bearish order block, and then we move into the IRL. Maybe you enter short. I would say it's pretty solid work though. Hey, you're definitely getting it. Let's see, the order block. If you're looking at this as the order block, or sorry, if you're looking at this one as the order block, yes, I would take both of these candles personally. We change in state of delivery here after moving off of this fair value gap. So if that's the order block you're looking at, then yes. If it's not that one, then it's wrong. But good work though. That's honestly super solid. Um, yeah, okay. Thanks for sessions. I get the ICT theory part, but still not good with how to put these in execution terms and workflow. Let's say trading BTC, we don't have kill zone like NQ, so when to check key levels and when to execute. What's your repeatable workflow like? I still use I still use kill zones for BTC personally, even though it's 24-hour markets. Like I said, go in the chart, map out 9:30 a.m. every single day, or look to see, just map out the kill zones and see if reliably do we get really good moves during those kill zones, and typically we do. So I do still use kill zones. And yeah, execution is really the last element. um, Everything else is super important in terms of building context and thesis, and execution is really that refinement, right? That's why we haven't even really been doing a lot of work with that third time frame yet. We've just been using the second time frame as our confirmation and our execution time frame, because execution it's like a whole nother beast, right? But yeah, okay guys, appreciate everybody showing up. Um, Guys, the people who are doing homework, they're moving ahead the fastest, um, because they're getting that chart time in and they're actively uh, trying to apply the knowledge that they're getting. So great work to everybody that did, and once again, if you're showing up, solid stuff, guys. Appreciate you guys. We'll see you tomorrow. Cheers. Peace.